Hey guys, this is Ehab. Today we're going to talk about the frequently asked questions that I typically get from my own clients about investing into the stock market and trying to simplify the tax questions and the tax complications that get behind the buying and selling and even holding the stocks or bonds or whatever your investment is. So I'm going to try to simplify it. I'm going to hit the most frequently asked questions, and hopefully that will help some of you, whether you're a beginner or whatever the case might be, that gives you a little bit of clarification on how to tackle those things going forward. The first question that I typically get is, will I be taxed on the stocks or the investments that I have if I don't touch it? And the answer is simply no. You're not going to pay taxes on stocks, bonds, whatever your investment is, as long as you don't touch them. So there's two sides of the transaction. There's the actual purchase, the buying of the stock or the investment, the index fund, whatever it is, and the selling, which is the last portion of it. Whatever in between, the holding period, you're okay there. You're not going to pay taxes on it. Once you execute the second part of it, which is the selling part, that's when you trigger a taxable transaction. So as long as you're holding it, you're okay, you're not going to pay taxes on it. Now, question number two that I typically get is, if I sell the stock and keep it in the brokerage account, will I be taxed on the money that I have in my account at that time? So they have a stock, they purchased a certain type of stocks, number of stocks, whatever the case might be. They sold it at a gain, for example. They purchased it for a less amount of money. It went up in value, it appreciated in value, and they sold it. But they kept the money in the brokerage account. They never withdraw it, they never take it to their bank accounts, they never cashed it out. Will they be taxed on that money? And the answer is yes. Regardless if you take the money out, if you purchase it, sell it at a gain, and you leave it in your account, you're still going to be taxed on it. You're going to pay capital gains. You're going to pay money on that transaction that you have made. Regardless whether you're taking it out, you cashed it out or not, you left it in your brokerage account, you're going to pay money on that. So think about it that way. The minute you purchase it, as soon as you sell it at a gain, you're going to owe taxes on it, regardless if you leave it in the account or not. And regardless if you purchase another stock or another investment with it, it does not matter at that time. The minute you sold it, the IRS want their portion until you go ahead and pay your taxes. Now, the third question that I typically get is, how much will I be paying in taxes? So, for example, I purchased something for cheap, went up in value, now I'm going to sell it for a gain. Now whether you keep it in the account or cash it out, it doesn't matter. You're going to owe taxes on it. The question is how much taxes you're going to have to pay for it. And the answer is really depends. So it depends if it was held for a short period of time or a long period of time. And the way the IRS defines these things is by the number of years. So if it's held for a year or less, that's a short-term capital gain. And if it's held for a year or more, it's a long-term capital gain. And that does make a difference how much taxes you're going to pay on that gain that you actually made. So in the case if you held it for less than a year, that's a short-term capital gain. Most likely you're going to pay ordinary income on it, just like any other income that you have made. So that money, the short-term capital gain, is going to be added on top of whatever your other income is. So if you have a W-2 job, if you have a side business, whatever other income you have that you're going to report on your taxes, it's going to be treated pretty much the same. This is going to be an additional income added to your taxes, and then you're going to calculate all of your taxes and pay taxes on all the money altogether. So it's not getting any special treatment just because it's a short-term capital gain, because you held it for less than 1 year. Now, if it's a long-term capital gain, if you held it for a year or more, you're going to pay less in taxes. It's going to be favorable tax bracket, most likely between 15 to 20%, give or take. It depends on your income. And you're going to pay that much money on it. So if you held it for longer than a year, that's a long-term capital gain, and you're going to be treated in a different tax bracket. That money is going to be taxed at a different tax bracket than your other income, W-2, side business, whatever it is, the money, the ordinary income that you're going to be taxed on separately. So it's always better for tax purposes to think about long-term. The longer you hold it, the better, at least a year or more. That way, when you sell the stock at a gain, you're going to pay capital gains tax instead of just ordinary income tax. Now, the fourth question that I typically get from my clients is that, okay, I sold a stock, but I sold it at a loss. And when I sell it at a loss, am I getting all the money deducted, and am I getting a grade deduction out of this? And the answer is also depends. It really depends on your tax situation. So we go back to the same example as a short-term, long-term capital loss. Those capital gains and capital losses, think about it that way. Capital losses can offset capital gains to their extent. And let me try to explain this and try to simplify it in a way that it's not that complicated for non-tax people. So if you sold a specific stock and you made $2,000 gain on it, and then you have another stock that you sold at a $2,000 loss, those losses, the $2,000 in capital losses, can offset the $2,000 in capital gains. That way, it's washed out. You don't have to pay anything on those gains. But it's only limited up to the gains that you had. So it's only going to be washing the gains that you had. So regardless of how much loss you had, as long as they wash up to the gains, then yes, they can wipe them out. You don't have to pay any taxes on the capital gains, but you can carry forward those capital losses. So always keep in mind that even if you don't get a good deduction at it this year, if you report your capital losses, you can carry it forward when you actually have gains, when you sell different stocks or different investments. Those losses can still offset them in future years. So even though you don't use it this year, think about it that it's going to benefit you next year or the year that follows. Now, the fifth question that I typically get is, how do I keep track of all these things? I purchase different stocks, I sell different stocks, I get into multiple investments per year. How do I keep track of all this that I have to report it on my tax return at year end? And mind you, we're doing all these transactions throughout the whole year. So how do you keep track of every single thing? And the answer is, most likely, most of the brokerage companies will send you a 1099 at year end. So that 1099 that you receive from your brokerage company, whatever company that you deal with when you're trying to invest into these stocks, they will send you some kind of 1099 that will show the cost basis, how much you gain, how much you loss, all the information that your CPA will need to prepare your taxes. That way you don't really have to keep track of every single individual stock that you purchased, you sold, when was the date. All these information is actually needed for your tax return to be prepared in a proper way. So you have to report these things regardless. But luckily enough that most brokerage firms will send you a 1099. That's not the case with cryptocurrency because they're still trying to keep up with all the transactions and how they're going to report it, how they're going to show it to the IRS. That still falls on you when it comes to cryptocurrency. So if you're buying and selling Bitcoin or crypto, you're going to have to keep track of it yourself and give it to your CPA, and that way they can include it on your tax return. But in any other stock, most likely your brokerage firm, in almost all cases, they're going to send you a 1099 at year end. That's going to specify, when did you actually purchase it? When did you sell it? So they keep track of every single transaction and how much you purchased it for, how much you sold it for, whether it was a gain or a loss, whatever it is. They're going to report it on that 1099. So you really don't have to keep track of these things, the individual stocks. Most likely just crypto for now until they figure out how they're going to report it. And then probably going forward, I'm assuming in the future, it's going to be just like any other stock where it's going to be reported on a 1099 where you don't really have to keep manual record of it. Besides that, you don't really have to memorize every single stock that you purchase. When did you purchase it? All of that detail. It's most likely going to show on your 1099. Just make sure if you don't receive it by mail, go ahead and log in online and download it yourself and send it to your CPA. That way they know they have a record of it and they include it on your tax return. If you don't and you miss it, you're probably going to be penalized by the IRS because they already have record that you sold some kind of stock and you made some kind of gain and you're not reporting it on your tax return. So that was it for today, guys. I hope that was helpful, and until next time.